Turn to M3 and Karen B for this week's episode of Comply on the Fly. You'll get quick and timely answers to the most common employee benefits compliance questions so you and your business can keep moving ahead. Please note this podcast and the contents herein do not constitute legal advice. Please seek the advice of counsel for any benefit compliance-related implementation, guidance, or strategy.
Hello, everyone. I'm Karen B. And the Comply on the Fly question of the week is, our employee is covered under his spouse's high deductible health plan at another employer. Our employee is not enrolled in our high deductible health plan. The employee's spouse has an HSA or health savings account. The question is, can our employee contribute to the HSA of the spouse? So here are my thoughts. First, the employee is most likely covered under family or employee plus one or employee plus spouse coverage under the spouse's high deductible health plan. If so, and the plan is HSA compatible, which I assume it is because the spouse has an HSA, then the family HSA limit applies. Second, for contributions to the HSA, the marriage rule for HSAs would apply, and the family limit could be split between your employee and the spouse, or the spouse could contribute up to the family limit alone. The employee could open their own HSA, or the employee could contribute to the spouse's HSA as well. Because HSAs, remember, are bank accounts, meaning the employee could make a deposit into that account just like any other bank account. 3, what I also think is being asked here is whether your employee could contribute via payroll pre-tax to either the spouse's HSA or, if the employee sets up an HSA, the employee's HSA. So for purposes of the employee asking you, hey, can I contribute out of payroll pre-tax into my spouse's HSA? The answer to that would be no. You cannot make pre-tax contributions to the HSA of a non-employee. However, for making pre-tax contributions into your employee's own HSA, maybe. But if you don't allow pre-tax HSA contributions because you don't offer an HSA compatible plan, you probably wouldn't allow it. I recommend that you look for your Section 125 written plan document, which is required if you offer pre-tax benefits, and see what you have agreed to allow for pre-tax deductions. If you don't address HSA deductions, you don't allow it. And that is your Comply on the Fly question of the week. Thanks for tuning in.
This concludes the 52nd weekly episode and Season 1 of Comply on the Fly. Thanks for making this your source for quick and timely compliance information for a full year. Please subscribe on Spotify, iTunes, or Google Podcasts so you don't miss Season 2, Episode 1 when it breaks on November 1st.